the upcoming release of the December Quarter Consumer Price Index, CPI, data is arguably the most politically significant economic indicator in recent Australian history. The market currently assigns an 84% probability to a 25 basis point interest rate cut by the Reserve Bank of Australia (RBA) at its mid-February meeting. However, this probability is highly sensitive to the December CPI figures. A higher-than-expected inflation reading will likely decrease the chances of a cut, while a lower-than-expected reading will bolster them. The stakes are incredibly high, impacting not only financial markets, but also the upcoming federal election, scheduled for sometime before May. The political landscape is exceptionally tight, with pre-election polling revealing a close contest. The current government faces a formidable challenge, particularly given the global trend of incumbent governments losing power in elections held throughout the last year. This historical context places immense pressure on the government to demonstrate tangible progress in addressing the escalating cost of living crisis, a key concern for Australian voters. Successful incumbent governments who navigated similar challenges in the past year implemented aggressive, proactive policies aimed at directly mitigating these pressures, a strategy the current government will undoubtedly be scrutinizing. The Australian Securities Exchange, ASX, provides a valuable real-time reflection of market sentiment concerning potential RBA interest rate adjustments through the pricing of cash rate contracts. These contracts currently reflect a 16% probability of the RBA maintaining the current interest rate in February, a scenario that appears somewhat counterintuitive given the prevailing market expectation of a rate cut. This discrepancy highlights the complexities of the situation and the inherent uncertainty surrounding the RBA's upcoming decision. The unexpectedly robust employment data released recently has introduced an element of uncertainty into the equation, fueling debate regarding the necessity of further monetary stimulus to support the labor market. Some argue that strong employment figures indicate the economy is resilient enough to withstand a period of unchanged interest rates or even a rate hike, potentially impacting the likelihood of a cut. Others maintain that focusing solely on employment data ignores the broader picture of escalating living costs, emphasizing the need for continued intervention to alleviate the burden on Australian households. The upcoming CPI release will therefore act as a crucial data point in informing the RBA's decision-making process. A lower-than-expected inflation reading would likely solidify the expectation of a rate cut, potentially boosting the government's chances in the upcoming election by demonstrating progress in managing the cost of living crisis. Conversely, a higher-than-expected inflation figure could lead the RBA to pause or even reverse course, putting additional pressure on the government to demonstrate its effectiveness in addressing this critical issue. The interplay between economic data, market expectations, and political realities creates a volatile and unpredictable environment, making the December CPI figures arguably the most consequential economic release in recent times. The implications extend far beyond the immediate financial markets, deeply impacting the political landscape and the future direction of the Australian economy. The weight of these interconnected factors underscores the considerable significance attached to the upcoming CPI announcement and its likely impact on the upcoming election. The government's response and the RBA's subsequent actions will shape not only the immediate economic climate, but also the trajectory of Australian politics in the coming months. The intense scrutiny surrounding this data emphasizes the high stakes involved and the potential for significant ramifications across multiple sectors.